Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Want to know the 3 biggest questions retirees are wanting answers to? Well, stay tuned as we begin a brand new 3-part series, The Top 3 Questions of Savers on Retirement.
Welcome to the only show in the country dedicated to helping savers worry less about money, The Worry-Free Retirement, with your host, retirement specialist and 6-time author and fiduciary, Tony Walker.
In the year of our Lord 2024, Northwestern Mutual Life Insurance Company conducted a very interesting study uncovering an apparent new discovery on the concerns of savers in retirement, reflecting something I've known and preached for years. The top 3 questions savers need answers to in order to create a worry-free retirement. The first question on savers' mind is this: how will taxes impact me in retirement? Question number 2: how much money will I need to retire comfortably? And finally, question number 3, the one question I've personally received over the past 20 years in specializing in retirement planning, the big kahuna of all questions: is it possible that I could outlive my savings? And while we at Tony Walker Financial have been answering these questions of savers for years, it appears that surveys such as this one are finally waking up the big financial institutions as to what savers truly need: assurance that they will be okay in retirement. It also is revealing to these financial institutions that the worries of savers are totally different than the worries of investors and speculators, something I covered in my book, The 3 Personalities of Money. In summary, what surveys such as this are confirming is that savers' worries have for years been ignored by the financial world. That is, until the financial world realized that each day more than 10,000 savers are hitting the age of 65 and in desperate need of a game plan that can successfully answer all 3 of these questions, which is why today yours truly will spend today and the next 2 weeks taking a deep dive to answer all 3. So let's get started. Well, welcome, folks, to the Worry-Free Retirement. And yes, I'm that little man in the sweater vest, retirement planning specialist and full-time fiduciary, Tony Walker. And before we share with you the answer to these 3 most important questions of savers, let me introduce 2 young lads who are most important to the production of this show each week: America's favorite financial sidekick, Mr. Aaron Orander, along with Louisville, Kentucky's most laid-back graphics artist, Mr. Derek Hudson. So why these 3 questions that are on the hearts and minds of savers? And while the financial world is perplexed as to why savers aren't asking the usual questions, they're hoping savers will ask these types of questions. Where's the best place to invest my money? Which target fund is best for my 401k plan? Or how about this one? Do I need a trust? It is now apparent that while these might be good questions for savers to consider, they are not crucial to a worry-free retirement, something I've learned from my experience in meeting with nearly 20,000 savers over more than 20 years of doing retirement planning. You see, more than 20 years ago, I began the lengthy process of developing something totally new to the financial world called the Worry-Free Retirement, a 5-step process whose aim is simple: to help savers worry less about money by creating a written game plan that they and we can monitor together. A game plan that is simple to understand and includes safety over risk. Since that time, the more than 5,000 written game plans we have created have helped to answer these 3 questions, which is why, when we return, I will take a deep dive into our first question, and that is: what should a saver expect to pay in the way of taxes in retirement, and also the strategies we offer at Tony Walker Financial to help savers deal with what I call the tax tumor. So stay tuned. I'm Tony Walker. We'll be right back.
This Better Business Bureau review comes to us from Steve. I have been retired for 8 weeks now, and my wife and I are loving every minute of it. Tony Walker put together a great plan for us several years ago, and now we are enjoying the results. We met with Tony several times and were kept well informed. Just met with Trey a couple of weeks ago at their request to make certain we completely understood everything that was happening with our money. We highly recommend Tony Walker Financial. The entire staff is great to work with. For more information, visit TonyWalkerFinancial.com or call 877-499-9255.
The individuals in this interview are uncompensated clients at the time of filming. Their opinions expressed were provided to Worry-Free Productions for use as an advertisement by Tony Walker Financial. Please refer to Form CRS and Form ADV Part 2A Disclosure Brochure for information regarding the advisory services offered by Tony Walker Financial.
Our client spotlight today shines brightly on Miss Darlene Benzik. And Miss Benzik, first of all, thank you so much for being on the program with us.
No, I'm honored to be here. Thank you.
Well, you're welcome. So, Miss Benzik, tell us a little bit about yourself.
Well, I have lived in the area for all of my life, quite frankly. I'm currently live in Oldham County.
And how did you find out about Tony Walker Financial?
We had been watching your show, like before church every Sunday. And of course, he viewed through the lens of your concepts and strategies, and he was like, spot on. And we both viewed the end of your show. You always tie it back to the Bible. And so that's very important to us. And so we prayed about it, and we came over here and just started gathering all these pieces. And then you all figured it out. It's like we just threw it all on your table, and then your folks figured it out beautifully. So.
And how has the experience been in working with our staff?
Oh, my. I've told everyone this, front to back. Usually you have bad apple in every batch, and there aren't any. I mean, everybody's been so helpful. When my husband initiated our changeover to Tony Walker, which I'm so grateful that he did, a few weeks later he passed away. So I was, as anybody out there who knows who's lost a spouse, your world kind of shatters, and you're picking up all these pieces that you're unsure of. And then you sat down with me personally, and I sat down with Trey, and everyone's taken their time and always so patient in a time where I wasn't always on top of things like I usually am. So, yeah, I appreciated everybody front to back.
Well, you're so welcome, and thank you for the opportunity to be of service.
Looking for an advisor you can trust? Schedule your free phone call with Tony at TonyWalkerFinancial.com or call 1-877-499-9255.
Of all the questions I have received since focusing on retirement planning more than 20 years ago, and as I continue to meet in person with 20 to 30 savers a week, these three questions, which are worth repeating both today and for the next 2 weeks on this show, are certainly the most important questions that savers must have answers to if those same savers expect to be worry-free in retirement. I mean, let's face it, if you are retired or thinking of retiring soon, how in the world can you sleep at night not having an understanding of how much Uncle Sam will take in the way of taxes from your 401k or other taxable assets? How can you get a good night's sleep not knowing if you truly have enough money to comfortably retire? And then finally, the frightening prospects that everybody worries about, and that is literally one day running out of money. Today, we are focusing on the first question: how will taxes impact your retirement? Now, this question is especially important for savers, those savers who currently have much of their life savings buried inside those pre-tax savings accounts, such as 401ks, 403bs, TSPs, or IRAs, because as you might now have learned by now, the lowest tax rates in the history of this country will expire at the end of 2025, which means the money you will owe in taxes when you go to take this money out of these plans at some point could be, I say could be, much higher in the future than they are right now, which begs the question: between now and the end of 2025, what are you going to do about it? Do you have in your corner an independent retirement planning firm who understands tax laws and how to use financial products and strategies to keep more of your hard-earned money in your pocket? Or are you going to just wait it out and hope the taxes remain at these historic lows? Well, rather than sitting around and hoping for the best, let me take a few minutes to explain the options we use at Tony Walker Financial to help our clients in planning for taxes in retirement. And again, folks, these may or may not be right for you, but they are options you should at least consider. All right, the first thing is something I refer to as a spend-down strategy. Now, most of the financial world really don't understand this or understand why in the world people would want to spend their assets, and I'll tell you why. The financial world is rewarded by you not spending your money. So it begs the question, why are you stockpiling all of this money for the future with no plans to spend it, knowing that, number one, the fees are going to eat away at it, and then number two, the taxes are just going to grow as the account grows? This is a strategy I outline in my latest book, Live Well, Die Broke. It's unique to the financial world and something most in the financial world either don't understand or, again, would rather not talk about it. Something I talk about again and remind people is you don't want to wait too long to spend this money. Number two would be something called a Roth conversion, which we've covered in extensive detail on this show. Warning shot over the bow. Everybody's pushing Roth conversions. Really something you want to take a look at, but be very careful on Roth conversions. Number three, RMDs, required minimum distributions. A lot of planning strategies that we bring to the table that, again, a lot in the financial world do not understand how best to use the RMD strategies. Number four, something called qualified charitable distributions, or QCDs. A wonderful way to keep money off your tax return, assuming you give a lot of money to charity anyway and you're over the age of 70 and a half. Again, we can help you think through if this is a good strategy for you. And finally, my favorite, gifting now versus waiting until after you croak. Folks, this makes no sense. Again, yeah, our grandparents kept a lot of money and they were afraid to spend it. Well, that's because they came out of the Depression and they didn't have all these tax-infested 401ks, but you do. So I'm just telling you, again, pick up a copy of Live Well, Die Broke. You need to have a strategy in place to start gifting money now versus trying to leave it when you die, because the tax tumor is just going to get passed right off to your kids. So how do you know which of these strategies is right for you? Well, there's only one way to know, and that's to have a free game plan set up where you and I will talk in person to determine if any of these strategies could help you lower your taxes on your retirement account. So do this right now. Take advantage of something we call the free 10-minute fiduciary phone call, where you and I will talk briefly to see if we can help. And if we can help, we're going to set up that no-obligation appointment to meet in person at either our Bowling Green, Louisville, or Lexington, Kentucky offices. So log on now, TonyWalkerFinancial.com, or give us a call anytime at 877-499-9255. We'll be right back. Looking to roll over your 401k? Then log on to TonyWalkerFinancial.com and learn just how easy it is to roll over and safeguard your 401k. Do it today. Heather, you know, back in the day, I used to do all those workshops. I probably had 3 or 4 months. Remember those days?
Oh, yeah.
And it never failed. And now this was years ago, but it never failed. I'd open up the floor to questions, and people would ask a lot of questions. And inevitably, I sometimes thought it was a competitor out there, but inevitably somebody would go, "Hey, Tony, I got a question. What happens to Tony Walker Financial when," I like that, they didn't say if, "when something happens to you?" And admittedly, 10, 15 years ago, that could have been a problem. Thank the Lord I'm here, but speak to the fact of the strides we've taken now that we're in 2024. So when something happens to Tony Walker, in your opinion, what's going to happen to Tony Walker Financial?
Well, one, hate for anything to happen to Tony Walker. But no, we do have a business continuation plan in place. And so you've been very conscious of that question. I mean, I think that question has followed you around for quite some time. But we have, 3 other advisors in the firm. We also have, like you said, a plan in place to have that continue on, hopefully seamlessly. And we've been very strategic in hiring staff that know what they're doing, younger staff, just so that we've got that continuity in place.
Yeah, I was reading an article, and I think I've shared this on the TV show, but what a lot of people I don't think are thinking about, since retirement planning per se is such a new field, you're going to need an advisor that knows you and understands the game plan for maybe not just 5 or 10 years. It could be 15, 20, 30 years. A lot of advisors are set to retire in the next 10 years. Other advisors will pass away, change firms. So again, speak to the importance of finding an advisor that you feel is going to be around, that's local, to service your needs long into the future.
Well, one thing you mentioned is having a game plan. I think a lot of advisors don't even have that. They'll pitch you some products and say that, hey, this is a good fit for you. But if they were to exit either by retirement or changing firms, which happens quite a bit, you're kind of left holding the bag and not knowing how to use it. The benefit of our game plan is that any of the advisors in the firm can pick up where we've left off and know exactly why we purchased those products, what they're used for, and how you're going to utilize them in retirement. And so with us being very intentional about continuing Tony Walker Financial, they have the roadmap to carry on through your retirement plan.
Our Tony Walker Financial 5-star review comes to us from David, who says the following. Tony and all of his associates were extremely helpful, down to earth, and welcoming. They made us feel secure in their recommendations. I feel good about our decision to go with Tony Walker Financial. For more information, visit TonyWalkerFinancial.com or call 877-499-9255.
Hi, this is Lisa here at Tony Walker Financial. We're often asked, what's the best age to start receiving Social Security retirement benefits? The answer is that there's not a single best age for everyone. The answer is personal and depends on several factors, such as your current cash needs, your current health, and family longevity. Also, consider if you plan to work in retirement and if you have other sources of retirement income. Considering these factors and estimating your future financial needs will help to determine what age is best for you to begin your benefit.
Besides running out of money, one of the greatest concerns of savers right now is this. It's called tax bracket creep. And this graph dramatically illustrates the fact that the more you make, the more they, that's Uncle Sam, will take. Now notice something here, that this tax bracket creep starts at 10 and 12% taxes. Now that's a very low rate. In fact, as we record this show again in 2024, the next creep up is to 22, then 24. It takes a lot of money to get up to the 32% bracket. Now, the reason I say all this, at the end of 2025, these current rates will expire. Now, what will Congress do with these rates? Well, they could go in and keep them. They could lower them. They could raise them. If they don't do anything, what a lot of people don't realize, these rates will automatically revert to the 2017 rate. So the point is, folks, if you ask me, as somebody that's been doing this for 40 years, they have got to raise the taxes to help cover the deficits. So what we mean by this tax bracket creep is now is the time to take action. If you have a 401k, an IRA, and you haven't dealt with what I call the tax tumor, you need to deal with it now because these are some of the lowest taxes in history, and we at Tony Walker Financial are well equipped to help you deal with them. So that's you right now. If you don't have a game plan to deal with the taxes and take advantage of these low rates that we're experiencing right now, log on to TonyWalkerFinancial.com, click on that Let's Get Started button. You have nothing to lose. The consultation is absolutely free, and we'll be happy to see if we can assist you by lowering taxes and keeping more money in your pocket. So how does tax bracket creep actually affect your wallet? We're going to explain that with using an actual case of somebody that's currently drawing income in the 12% bracket, but then decides to take out money out of their 401k plan. One of the most confusing things in retirement for most savers is the tax laws, and basically this element we call tax bracket creep, which again simply means the more you make, the more they take. So with this comes up quite often where somebody might come to me and maybe between their Social Security, let's say, maybe they got a little bit of interest coming off some CDs, maybe even a little small pension. And under the current laws as they are now, they might be in what's called a 12% tax bracket, which again are some of the lowest brackets I've seen in doing this for nearly 40 years. These are very low tax brackets. Again, under current laws, we record this show in 2024, the next tax bracket creeps up to 22%. So it's a pretty big jump there to go from 12 to 22. But in this case, we're assuming all of their income put them in a 12% tax bracket. So the income, we're just ballparking this. Obviously, if their total income was $100,000 in a 12% bracket, that means Uncle Sam would be taking $12,000 a year, federal taxes, all right? Kind of simple, very general in terms of trying to understand where we're going with this. But now let's just say they've got a 401k over here. It's worth $300,000. and they really have thought about just cashing a bunch of that money out for whatever reason. Maybe they're wanting to buy a new car, or they're thinking about a second home, and they're like, well, we don't even really need the money. They're worried about the stock market. They've heard me preach about this idea that taxes will probably go up in the future. And, of course, if they don't change the laws at the end of 2025, they will revert back to the 2017 laws, which were higher brackets. So that's a reality. Obviously, we're not paying down the debt, so somewhere they're going to have to get more money. So somebody might say, well, heck, Tony, why don't I just liquidate most of this 401k? That would be fine, but you've got to remember that's going to put you in a 22, possibly even creep up to a 24% bracket. So on a federal basis, roughly that's about $66,000 in taxes.
Heavy.
Now, you might be saying, but Tony, aren't these taxes pretty low? Shouldn't I go ahead and take the tax hit now? In some cases, folks, depending on how strong you feel about your different goals, I might tell you to do this. We have done this before, especially with people who get into retirement and don't want any debt. We've taken the tax hit before and paid off home debt. So it all depends on your situation, and this is why you need a trained retirement specialist who understands the mechanics of this, the taxes, the fees, all of the things that you're going to be faced with as you move through retirement. So if you don't have a game plan, or you don't feel like you have somebody that's really experienced in the art of retirement planning, why don't you do this right now? Log on to TonyWalkerFinancial.com, TonyWalkerFinancial.com. Click on the Let's Get Started button. Let's arrange that free 10-minute fiduciary phone call. It's absolutely free. We'd be happy to talk to you at any time. We'll be right back. Have you recently retired, been laid off, or offered a pension buyout? Has the company you work for moved, been acquired, or closed its doors forever? And finally, do you have a 401k with a previous employer you'd like to move to safer territory? Then take advantage of this opportunity to move your 401k or lump sum pension to Tony Walker Financial. Let's meet in person to discuss your retirement options. Log on now to TonyWalkerFinancial.com to schedule your free, no-obligation appointment. Let us help you today.
Are you retired or retiring soon? Do you have a 401k, IRA, 403b, thrift savings account, or lump sum pension that you'd like to move to safer territory? Did you know that all the money you see on your 401k statement isn't really yours? Depending on your overall taxable income, the government has essentially a lien on your 401k that can tax as much as 40% of your money when you go to take it out. Tony Walker calls this the 401k tax tumor. For almost 40 years, retirement specialist Tony Walker has helped thousands of savers worry less about money by creating game plans to deal with your tax tumor. Get control of your retirement by controlling the taxes owed on it. Schedule a free meeting to see if you can reduce your tax tumor and provide a guaranteed income you can never outlive. To get started, simply log on to TonyWalkerFinancial.com. That's TonyWalkerFinancial.com.
Looking to roll over your 401k? Then log on to TonyWalkerFinancial.com and learn just how easy it is to roll over and safeguard your 401k. Do it today. Welcome back to the Worry-Free Retirement. Tony Walker here, and we're talking about the issue of taxes. And we're going to get into some tax planning issues here and bring in our own TJ Reagan in just a second. But it's interesting that we've always said that it's estimated that 10,000 people turn 65 every day in this country. Well, there's a new study by the Retirement Income Institute at Alliance for Lifetime Income, that's a mouthful, that says basically that number is up to 11,200 Americans are turning 65 each and every day, which means a lot of tax-infested 401k and IRAs out there with huge tax tumors are going to have to deal with too, which is why we have in the studio with us via Zoom, actually in our Bowling Green office, one of our tax certified specialists at Tony Walker Financial, Mr. TJ Reagan. How you doing there, Mr. Reagan?
Doing well, Tony. How about you?
Doing good, and thanks for joining us. And I think the reason I wanted to have you on, TJ, is not only are you and Leanne done such a wonderful job, and we provide these free tax planning services and calculations for our clients at Tony Walker Financial. But one thing we've implemented in our offices is after hours, we're starting to meet as staff and really just doing deep dive and training and a lot of these things to make sure all staff is at least aware of a lot of our own services. You know, we've got so much going on. Sometimes I think the staff doesn't know how much we have going on. So these have really been helpful. And one thing you put together for us was basically RMD specific, some training on that. So first of all, thank you very much for doing that. And if you would just share a little bit about how you think things are going and the importance of this tax planning training, not only for our staff, but also for our clients who need us in this area.
Things are going pretty well. The RMD process, it's really an all-year process for us at Tony Walker. I start in January compiling a Excel spreadsheet of all the RMD contracts and clients that we have. About 1,400 contracts between annuities and Schwab, and 1,000 clients. So it's a daunting task.
Well, and that's why, I say that some of the staff doesn't realize I didn't know those numbers. I mean, I knew we had a lot of clients. I kind of know how many clients we had, but I had no idea that 1,400 contracts and accounts had to be monitored for RMD purposes. And again, folks, we don't charge anything extra for this. And I'm not to disparage other advisors. Most advisors, though, just kind of, if you have multiple accounts, they just set everything on automatic RMD. And sometimes we do that. But a lot of times, TJ, speak to why you just can't go dragging everything out of all the accounts for RMDs, and give an example of maybe why we want to take RMDs maybe from a certain account and maybe in one tax year not take it out of the other.
Yeah, so what we try to do is go with the liquid accounts first. So we try to take the RMD from the Schwab accounts first, so that way it doesn't grow at exponential rates to make it a larger amount in later years. And then after that's dwindled down, we'll start the lifetime income or mailbox money from the annuities.
And that a lot of times that covers the RMD, doesn't it? I think a lot of people, that to me, that makes sense, because as you get into these later years, people worry about missing an RMD. We'll get to the penalties in a minute. This way, you really do get on autopilot at a point in time in the second half. Plus, you make sure you don't run out of money. I think it's a win-win, don't you?
Absolutely.
Okay, let's talk about penalties, because that scares people to death. What has been historically the penalty? Now, we're imagining somebody turns 73. Folks, that's the age you have to take money out of these tax-infested plans. But what happens if somebody turns 73, TJ? What happened in the past? What were the penalties, and what are the penalties now if somebody accidentally skips and forgets to do their RMD distribution?
So before 2022, the penalty for failure to take RMD was 50% of the amount not taken. So if you had a $10,000 RMD, but you only took $5,000, your penalty then would be the $2,500 of the $5,000 you didn't take. Now that has been reduced to 25%, and it can be reduced further to 10% if done in a timely manner, which the IRS has deemed to be 2 years.
Okay, so we've run into people that have come to us that transfer money over. One of the things we try to do if they are at RMD age, usually it's best, wouldn't you say, to go on and get that RMD taken care of before the money is transferred to Tony Walker Financial. Has that been our policy?
Yes, because it's a lot more clear picture of what the RMD should be. And we don't always have the most recent or up-to-date statements to show exactly what it should be. So if we don't have that, then it's just our best guess.
And then finally, we've talked a little bit about QCDs, qualified charitable distributions. And you know how I feel about these, TJ. I don't want to get on the government too bad. Most of the tax law changes and everything get kind of complicated. I like this one, though. Briefly describe what is a QCD and who would be a good candidate to consider one.
So a QCD is a qualified charitable distribution that can go to any charity of your choice, church, anything that's considered a nonprofit. And so the way that works, or the ideal candidates, anybody over 70 and a half, you don't necessarily have to even be RMD age, but you need to be charitably minded. And really it's for people who say they don't need the income, but we hear that often.
So somebody's 71 years of age, they've been given $10,000, $15,000 to charity anyway. Why not keep it off your tax return? And then we would send them the check directly to them, payable to the charity. Then they could just run it over to their church or charity. But the beauty of that is they don't have to claim any of that as income and possibly mess up Social Security and some other things that could be impacted by these RMDs, correct?
That's correct.
Well, TJ, it's wonderful having you on, and we appreciate you and Leanne Tinsley so much in the tax planning department. So, again, thanks for your time and all that you do for our clients.
Thank you, Tony.
You're welcome. Well, folks, that's all the time we have for the Worry-Free Retirement. We hope you've enjoyed today's program. Remember, next week, we get into question number 2, the most popular questions that savers need to be asking to be worry-free in retirement. But you remember, between now and next week, if all else fails, you be worry-free and make it a good one.